Hello everyone, I'm Dr. Stock. This video is for entertainment purposes only. Today I would like to talk to you about some of the ongoings that we've had that have affected the stock market recently, along with some of the dip plays that I'm taking a look at. Maybe you would also like to take a look at them. Without further ado, let's get ready to rock. Welcome back. For those of you who are interested, down in the description is a link to my Patreon. Over at the Patreon, if you sign up and become a member, you'll find access to my growth portfolio, my dividend portfolio, my weekly watch list of stocks, my weekly newsletter, also access to my private Discord where we talk stocks throughout the trading days and over the weekend. I've also started putting out Patreon exclusive videos. I've done 3 of those videos so far. It's been a lot of fun. I really like the way that they're developing, and I really like the path that I have them on, and I look forward to developing those. Also, the community that's growing around the topics that we have is also something that I've really enjoyed, and I really like watching everyone interact with one another, even when I am just a bystander in the Discord, watching the communication happen. It's really encouraging to see the support on these red days and the celebrations on the green days when we see the stocks that we're interested in really taking off. So we're hoping to see more of those in those growth areas soon. Some of those calmer, less volatile stocks don't necessarily bring along a lot of the same excitement. Anyway, I gotta move on. Down in the description, you'll also find a link to Webull. By signing up and depositing $100, you get 2 free stocks valued anywhere from $8 up to $1,850. I get 2 free stocks for the referral, so thank you ahead of time for the support for that. Finally, if you haven't already, subscribe, hit the like button, hit the notification bell. Let's get on to the stocks. Alright, so just briefly, if you haven't heard, and by now it's not news for a lot of people who follow this sort of thing, but the ship that was stuck, I think it was called the Evergreen, stuck in the Suez Canal, causing all sorts of supply chain issues because they couldn't pass through the Suez Canal. Instead, people had to pass down around the southern tip of Africa in order to get the goods that were on those ships around Africa instead of through the Suez Canal and through, I believe it's the Mediterranean. Geography is not necessarily my strong point, but those disruptions should hopefully even out. I'm not really sure if there's other issues that go on with the canal work that they were doing, if there's other disruptions that are caused that were caused by getting that ship free. So that's something we're gonna have to watch how that plays out. But as far as I understand, it's free. It's moving out of the way. So I think that we're in pretty good shape as far as that goes. The other thing is the ARKX Capital hedge fund or family fund, whatever you want to call it. Them defaulting on their margin was a big thing because there was billions of dollars that were at play, and they were way over leveraged. And what happens when you're over leveraged is that if the stocks drop too much in value and then you don't have the funds to cover it, you get margin called, and then you either put up the funds or your stock gets sold off. And as a result, their stock got sold off because they defaulted on those margin calls. So that caused a lot of disruption, and some of the bank stocks were down today because they had enough in these block trades that they were doing. There was enough capital tied to those that it actually affects the amount of cash that the banks have in a seriously and impactful way. So some of the bank stocks were affected with that. Goldman Sachs, I know, was one of them, and there were several others that were tied to it. I don't think that JP Morgan was named. I think Wells Fargo was also not named. Citigroup, I think, was also besides that. But they still may have been down either in sympathy in the markets or in sympathy with that ARKX Capital. People wondering, will there be a chain effect that goes along with this? I think that this would be a pretty isolated incident, although there might be other companies that might be a little bit more watchful in these market circumstances, so that way they're not so over leveraged to the point where they face that possible margin call. I know that if I were the one running it, that I would be extra careful, especially in these conditions, and seeing what happened to somebody else, that walking that fine line of too much margin. I mean, it can happen to anybody, just as we saw here, retail investor and hedge fund or these huge family funds alike. It really can happen to anybody. So just be careful if you are using a margin account. We're typically for the margin accounts that we have, usually it's a 2x margin. I think they can run up to 4 times margin on some of these plays. A few other things: the ARKX ETF becomes available for trading tomorrow. And if you go onto the website and look up the ARKX ETF, just Google it, type it in, and you'll see the link to the site. That'll take you out to ARK, and you can download the CSV version if you want to upload it to a spreadsheet, and you can use Google Finance, and you can make it interactive and track those stocks yourself. You can also just download the PDF if you're looking for the stocks that are also part of it. And there's 39 different different stocks right now, as far as I can tell. And there were some surprising names that were in there. I believe Microsoft was in there, Google was in there. Amazon was also in there. So as far as space exploration innovation, are they sort of a tie-in like satellite 5G kind of play, being the network that they have there? Are they setting up their own services? I don't really know the exact tie-in, but it was interesting to see some of the ones that were included in it. There were 3D printing companies that were in there as well. So like I said, that becomes available on exchanges tomorrow for the trading day. ARK also had some notable purchases, and this kind of brings me to some of the stocks that have either recently come down in price or have a depressed price from the extended time period of sell-offs, and I'm going to share those with you now. Alright, the first purchase that I want to share with you is Zillow, and this one, ARK just picked up over 100,000 more shares of this into, I believe it was their ARKW ETF. You can check, see if that really was the case, but I believe it's ARKW if my memory serves me correctly. So when you look at this, they were up over $200, fell down to, we're getting close to that $100 mark. At 104, this thing's down 50% of what it was at its highs. So after this sell-off that we had, all the tech stocks are selling off. Zillow is still a tech stock, even though it deals with real estate, and they refer to themselves as being the top of the funnel. They get people into the set of homes or whatever that they're looking for, the real estate that they're looking to buy, and then it filters down through from that. So they're trying to work on capitalizing on the rest of that, and I really think that Zillow, they've been referred to as the 800-pound gorilla for this space, Opendoor being sort of a little brother to this company. And I've talked about Opendoor before on my channel. But Zillow coming down to these prices certainly makes it a little bit more accessible and a little bit more reasonable. Now, we could watch it drop more from where it's at here, so maybe not take in a full position, but maybe dollar cost averaging might be a better approach here. But I really do like this play. Zillow being referred to as the 800-pound gorilla, being the leader in their space for what they do for online home buying, or at least finding those online homes. Okay, ARK added about 176,000 shares of this one. This is TDOC, ticker symbol TDOC, and for TDOC they were up over $300, and then as we get through the pandemic here and through the tech sell-offs and everything, it bottomed out down to about $166.70. So we are way down from the top, almost again that 50% cut from where we were at, up at the top of this. And the argument for TDOC, because it's hugely popular during the pandemic when we had to call out for those medical services. The argument now is it still going to be relevant now that we're getting out of the pandemic, that the vaccines are there? And I believe that TDOC is going to have some staying power. I think it's going to recover. I don't know if we'll see that $308 happen again anytime soon, but I think this trajectory that we saw earlier on leading up to January 2021, I think that we could return to that trajectory. I think we'll see that strength come back. And if we look at the analyst estimates, 210 is the low estimate that we have out of 29 estimates. Looking up to the high, 330, I could at least find the low one very believable. As we get through the sell-off here, we'll find out what kind of strength these stocks really have, and what kind of staying power a company like TDOC does have coming out of the pandemic. And finally, a rather huge purchase that we had from ARK. This is about 500,000 shares, about 500,000 shares spread across two different ETFs of theirs. I don't remember exactly which ones they were. One was ARKF and the other one was ARKK, I believe. And ARKF, I think, was like 160 or 140,000 shares, and then the other 360 or 340, 360 or 340,000 shares went to the other one, went to ARKK, I believe. And this drop that we see today, not only did we have the market bias with the sell-off, again, the rotation of those stocks, but this is moving in sympathy, I believe, with the judgment through New York that said we're not so much a judgment, so much as just passing it down the line that, we're not ready to legalize the online sports betting like DraftKings, Penn National, all that sort of stuff. Not just yet. We think there's too many things on the agenda. We just don't see that we have time for it. There's too many issues surrounding it. So this is a delay. So the delay plus the sell-off, and that brings us down to $58. So this thing, if we look at the analyst estimates, 40% down, but if that's to the low end of it, but if we actually compare it to the high end of this, we have room for almost doubling from where we're currently at. So 40% down up to almost 100% up. this is looking, like almost a 2-to-1 reward, or 1-to-2 risk to reward ratio that we would have. So we'd be risking about 40% for gaining about 80% from where we're currently at. So just another thing to keep in mind for this. This is a company that ARK has bought heavily into. They were already in this into DraftKings, but buying 500,000 more shares at this price that we have coming in at $58. I think that we're going to see strength come back to DraftKings from this price, especially if not in the short term, at least over the next 12 months. I think that we'll continue that climb, maybe off this bottom line that we have here. When the market comes back for these plays like this, for the gambling stocks like this one, I think we'll see the strength come back in all of them, and DraftKings is one of the ones that ARK Invest has high convictions in. It's one of my favorites that I have, and so that it's one that I just wanted to share with all of you. So let me summarize. The supply-demand issues due to the Suez Canal blockage, well, they should even themselves out within the next few days, I would guess. Maybe a week, maybe 10 days. We'll see what the news has to say about that as it comes out. But that should be something that's short-term and smooths itself out and shouldn't cause any long-term effects. As far as the Archegos Capital, really knocking some of the bank stocks, the bigger banks that we have, and even the ones that weren't necessarily shown as being involved, pulling down their stock prices, putting that pressure downward on their prices in sympathy. That's something that banks are considered good. It plays for inflation. So even if we see short-term inflation throughout the rest of 2021, these lower prices that we have, they might be opportunities for us. So keep that in mind. Moving on, Zillow. I think that Zillow I think they're the champion in their space right now, and I think there's a huge market for online home buying, and Zillow being number one in my book. They're just one that I wanted to bring up to you guys, just in case there wasn't something that had your attention. Maybe it's something you want to give attention to. TDOC, I think that they're going to persist, maybe not immediately at the strength that they had through the pandemic, but they're on people's minds, and maybe people had good experiences with those. People have talked about the new normal. The phrase has been beaten to death by now about coming through the pandemic, but it has changed people. It's changed me. I've even been relatively healthy through this, but just seeing how it's affected other family members, other friends of friends, and knowing people who have not had such a good time of it, and knowing people who have died because of it. That changes me as well, even for my own health. I'm like, I'm a pretty healthy guy. I don't know that it happened to me, but then I think about my daughters and not wanting anything to happen to them. I mean, these things change. So TDOC, I think it's got some staying power even beyond the pandemic. So that's something that I also like. ARK Invest likes it moving forward. And DraftKings, also one of my favorites out of the gambling stocks. Heavy buying from ARK Invest today. I think this price that we see at $58, for the short term, we might see up from there, we might see down from there, but over the long term, at least as far as the 12-month price targets goes, I think we're going to end up significantly up from there. I think we'll see that $70 again within the next few weeks within the next few months. At least, at the very longest, I think within the next 12 months, as according to that average price target that we have by the analyst estimates. So that's what I have for you today. I hope that you guys liked it. If you want to join my Patreon, that link is down in the description. If you want to sign up, deposit your $100 and get your 2 free stocks from Webull, that link's also down there. Thank you guys for everything that you've done for me and all the support that you show this channel. If you haven't already subscribed and you'd like to, please do. Hit the like button, please, and share it with your friends. Remember, these videos are for entertainment purposes only. Always do your own research and due diligence. Contact a financial advisor before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.